Good morning, traders, and welcome to our free Elliott wave analysis video. This is Juan Maldonado from the Elliott Wave Street. Please read the disclaimer on elliottwavestreet.com, and under About Us you can find the terms and conditions and the disclaimer. Let's start with the euro this week. We are going to talk about the price action, what we can do, and what's the plan. So the price on the euro has been going down during this market cycle. Now the big question is if the wave 1 is done. I was thinking that was over, but the price started to move down during these last 2-3 weeks, and now we have a big risk of invalidation for this market reversal. If the price goes below the end of wave 2 black, right here, it will invalidate the bullish reversal, and that level, precisely the low of this candle, is the 111.81, so that's the invalidation level. And if that happens, that will mean that the price just did a 3-wave sequence, and if the price hits that level, we're going to have a lower low back to the 111, 110 area. We could go very easily. So in that case, I'm going to move my wave 1 to the right, and I'm going to try it again to get into the trend to the upside. But before we validate that invalidation, let's go to lower time frames to see what's going on. So on the lower time frames, the last week I triggered a trade at the 112.30 area, and with a 30 pip stop loss at the 112. The price went up to the previous move up here to the 112.82, and then it started to move lower back to the 112.05. Then it bounced up again. So this morning I closed my trade at the 112.20 with just a 10 pip stop loss, because look, on the lower time frames it seems that we are going to have a lower low. Let's have a look at the 4-hour chart. On the 4-hour chart, we need to have the euro to go back to the 112. So that's why I closed my trade right here with just a 10 pip stop loss. And now we are going back to the 112 this week. I'm going to look closely this level of the 111.94, because if the price falls below this level, then this wave 2 is active, and we will be in the risk of the 111.81. That's the weekly risk of invalidation. Then we're going to the 110 area if that happens. So look, to make things simple, here is my strategy for this week. If this is right, if the wave count remains active, then what we should see is just a move back to this 112 area and a bounce. And if that happens, I'm going to buy the euro. And the target will be this 112.80 area. If it breaks, fantastic for this wave 1. But it needs to happen right here, because if it falls below this low, it's going to cause that this wave 2 will be active, and then it's likely to go below this level as an alternative scenario, and we will be on the weekly chart again on the wave 1. So that's why we have to keep an eye. But that's my strategy, and you can take the trial of this service. I will tell you more at the end of the video to receive a daily update, because this is very important what is happening on the euro this week. And the dollar yen seems that we are going up. Wave 4 is active. The target for the week is going to be the 108.90 area. So we are going up on the dollar yen, and once the wave 4 ends, once we have this 3-wave sequence, I'm going to be ready. I hope this cycle ends fast, like the middle of the week or so, to take a short trade. I want to take a short trade on the dollar yen back to the previous low first, and then we can hold it, because look, on the weekly chart we are at the breakout of a triangle, and this triangle has been huge, and we are in the pullback for the breakout of the triangle. The target that I'm looking on the dollar yen for next month will be around the 104.80. So this is going to be a beautiful setup. The S&P, big news on the S&P. The S&P seems that it's doing on the 4-hour chart a head and shoulders formation, where here is the left shoulder, here is the head, and here is the right shoulder. So here is the strategy, how to use this Elliott wave count to find a trade. So once we have the 3-wave sequence, that's the first step, don't do anything, wait for the 3-wave sequence at a trend line. And once the price starts breaking the trend line, this will be the first entry using the Elliott wave count, and this will be the second entry. So the first one and the second one, you can pick one or the other, or you can mix them, like to add half of the position here and the other half here, and that's the validation. Validation is key, because if we don't wait for validation here or here, then the price right now could make a higher high, and this is an earnings week, so of course we have to be careful. And finally, the oil today is going down. The target is going to be the 54.73. I'm using a CFD, so it could be different, the quotes. If you check the quotes with your chart, it could be different. The same for the S&P. So just adjust it for you can adjust them just with your quotes. Look for this 3-wave sequence, and the previous low will be the target for the week. Once we have the completion of this wave 1, let's get ready, because it's gonna make a 3-wave sequence to the upside for the wave 2. And then we're going short, because on the weekly chart, I believe this market cycle has started, and the target is gonna be the 42 area. So if you want to receive the daily analysis with trade ideas, with the daily video, with charts, and with all the content that we have on Elliott Wave Street, visit ElliottWaveStreet.com right now, and under membership, click there, and you will find all the details about the membership. So here is all the things you need to know about the membership. If you have questions, contact us. The first amount is just $19, then $75 automatic recurring payments after that. You can cancel anytime, just send us an email, and subscribe now to receive your login details to start using the service. So please have a fantastic trading week, make some good money, and I'll see you soon. Take care. Bye-bye.